please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's look at some sectors that have been doing exceptionally well. Among them has been the commercial vehicles sector and lenders to that sector. Shriram Transport stock has been a beneficiary, has been up and about in trade after these strong commercial vehicle sales for past many months actually. Very strong sales in December. Okay, still strong sales in January as well. Analysts are expecting a stronger growth for this company as well over the next 12 months. Umesh Revankar, Managing Director, Shriram Transport Finance, joins us now. Good morning, Umesh. Thank you very much for joining us. Well, how's business actually? Is this strong CV sales turning out into a good visibility? How much further can you see and say that your loan growth will continue?
If you look at the last peak sales in commercial vehicle, it was in 2012 for heavy commercial vehicle and 2013 for LCVs, light commercial vehicle. We are yet to reach that kind of a scale. Even today, we are yet to cross that 2012 and 2013 for heavy and LCVs. That means there is still an opportunity because India has grown in last 3 years. Even if you take 7% CAGR growth of GDP growth, India has grown. That means more number of vehicles is definitely required. And in certain segment, you do need a new vehicle, replacement of older vehicle with new vehicle continuously. So that makes the demand continuous. That's one thing. And second, the infrastructure activity, which has been coming up in the last 1 year, has been significantly larger than what it was sometimes back in 12 or 13. So that means a lot of infrastructure projects are likely to be implemented. So demand because of that also is quite high. So infrastructure related commercial vehicles demand is good. And the LCV demand basically comes out of good agri output in the last 2 years and a reasonably good increase in consumption and the logistic operation. And the one more big factor that has been continuously playing positive is the overload ban in the northern states, which was quite prevalent. And that has helped to people to move on to new vehicle and newer vehicle. Even though there is a small change in the popular vehicle segment in heavy, which was 31 tonner earlier in 2012. Now it is moving to 37 tonner. So number of unit sale may not significantly go up, but still the demand will be very strong and consistent.
In fact, I wanted to talk a little bit about this overloading ban, Mr. Revankar. Has it been implemented by most state governments now? And because of that, are we seeing a higher amount of heavier commercial vehicles being bought? And is that something that will also help you with respect to higher disbursements?
Yeah, definitely. See, the vehicles, popular vehicles are moving from 31 to 37 tonner. So that is going to be a popular vehicle for next maybe 3 or 4 or 5 years. Still, the market starts moving into tractor trailer. But ultimately, I feel the tractor trailer segment, which is now concentrated on 40 tonner, is likely to move to 49 tonner once the infrastructure becomes better. That may be another 2 or 3 years down the line. So the tractor trailer and in the rigid vehicle, 37 tonner, that is going to play, and that is creating more demand. The interstate movement is strictly controlled. Intrastate, still you have overloading continuing, but the interstate borders are highly controlled now, and there is a better discipline among people. People also see opportunity by keeping good discipline. The vehicle breakdown is much lower, and the life is better. So people are understanding the value of it.
So what will all of this do to your disbursement levels? I mean, what kind of growth would you be looking at? Because, you know, we were speaking with the management of Bharat Forge as well a while back, yesterday in fact, and he did mention that the demand for commercial vehicles, because of overloading, because of, you know, the tractor trailers picking up, etc., the demand is much higher than what we've seen over the last many years. So will disbursement growth also look much better?
Definitely. See, till last quarter, if you look at year on year, we have grown by around 18% on AUM. we should be growing anything between 18 to 20 in the next few quarters, and it can also go up if the demand picks up further, because now the steel and iron movement is quite high. So steel and cement. See, steel and cement movement take away around 5 to 10% of the vehicles, because they are bulk goods. Once the 5 to 10% of the vehicles are taken away for cement and steel, additional demand of steel and cement, automatically there will be a shortage for the normal activities, that is for freight movement. So I feel if the demand for cement and steel continues, there will be significant demand for higher tonnage vehicle, and that will ultimately lead into a reasonably good, robust demand. So we can be looking at growth beyond what is being consistently talked about, 15 to 18. We can grow beyond 18 plus.
Okay. Umesh, how much of your total AUM you raised in the last 2 years, say? I mean, I just want to know what percentage were those low-cost funds that you raised over the last 18 to 24 months?
Low-cost funds. See, if you look at our ALM, we have 3 years typical borrowing and 3 years typical lending. So the 3 years means 1/3 of our book gets replaced every year. So we don't have short term. We don't have CP. CP is an insignificant part of our total borrowing.
Okay.
So you can expect 1/3 of our borrowing every year, around 20,000 crores to get replaced every year.
Yeah, but that 1/3 is now going to be at least 1% to 1.5 percentage point more expensive. You will be able to pass it on?
See, it is. We feel that tightness in the liquidity will come down once the April month is over. Normally, year end, every year we witness that. So, what is going to be the cost of fund post March is something to be seen. I believe it will be around 50 basis point, and 1/3 of on our total portfolio, that will be around 15-20 basis point, which will be we will be able to pass it on. So if it is more than 15-20%, then probably we need to reduce our growth strategy and keep the margin. So we have a choice between growth beyond 20 or trying to grow a little slower and keeping the margin. So we have to take a call depending upon the situation.
Okay, fair point. That only thing is whether after April the PSU banks return to the market and therefore will yields stay where they are, or will they rise, is something people are not daring to guess at this point in time. Finally, Umesh, it is also very clear that public sector banks will not have growth capital. What we thought was a tidy sum of money, 2.1 lakh crore, now looks barely enough after the new NPA resolution rules. So will that give you all more pricing power? Because this big giant, probably 50% of the market, is not really going to be competing for lending.
Yeah, there is definitely advantage, but whether you should use that as a pricing bargain or to get into more penetration, we need to take a call, because I feel the advantages of pricing depends upon the viability of the business. If the business is not viable by putting more interest rate, then we need to balance it. So balancing and making the business viable is very important for us.